Okay, happy Friday. Dan Fitzpatrick here at StockMarketMentor.com, and I want to look at TOST today, and here's why. One of our traders in the forum today posted his plan for this stock, which gapped up between yesterday's close. Now, they reported earnings after hours yesterday, so the stock moved a lot. I'm just showing you the daily, during hours trading action here, and you'll see the stock gapped up from yesterday's close to today's open by about 20%. And this trader that we have has, and I've watched this guy for a while. He's really good. He understands short-term 59-minute trade tactics, which is what I teach. He understands that very well. So he laid out a trade for both the long and the short side. And you may say, well, what the heck is somebody thinking about going long on a stock that gaps up 20%? And I'll tell you why. Because it's just the second side of a two-sided trade. It could go either way, and a lot of times you will see these kind of low-profile stocks make a big gap on earnings and then just keep going. So that was one of the strategies that he was looking for, was a gap and run, or a gap and go, whatever you want to call it. In this case, I would just call it a breakaway gap. But that's not really what happened. And by the way, I'm doing this video, and we still have an hour to go in the day. You can see what the time is here. But I wanted to describe this trade real quick to the short side. So again, context, 20% gap. Now, let's look at this stock in terms of VWAP, volume weighted average price. And the VWAP is an indicator that tells you what the average price per share is in trading that day. So in other words, volume is a component. It's not just what was the closing price on in this case, a 5-minute bar chart. It's how many shares were traded and at what price. Add them all together. Add the prices together divided by the number of shares, and boom, now you have your VWAP value. So the idea is that if a stock is holding above the volume weighted average price, that means that there's buying interest. And if the stock's holding below the volume weighted average price, that means that there's selling interest. The sellers are more aggressive. But here's the other thing. When you have a stock that gaps up so much, the first print on the VWAP is obviously going to be much higher. But what you want to be doing is watching and seeing where the stock goes after that opening gap. So here, you can see, let me drag this thing over. And by the way, guys, these are pro tips here. Like, this isn't just BS stuff. This is really important. So the stock gaps up here. I was watching it. I didn't trade it. I had a bunch of other stuff to do. I just didn't feel like watching it. But I was watching it, just curious to see whether the stock was going to go up or down after the open. Now, it opened at 21.76. The high was 21.76. So the stock just kind of oscillated around here in a fairly tight range. But then starting the second minute, 9:31 or 9:32, what happens? The stock starts trading down. And then ultimately, just about the time that it fell below the first minute's low of 21.40, it was also below the volume weighted average price, and never looked back for several minutes, probably for, well, you see here at 10 o'clock. So it was half an hour before the stock even came back up to test the volume weighted average price. So the trade on this, and look, you have to have a lot of experience doing this. I make it sound really easy. It's not easy, but it is simple. These are simple concepts. The difficulty is in handling your emotions and handling your bias, your preconceived notion of whether the stock should go up or should go down. Because if you have a real strong bias one way or another, your mind is going to start sorting through things to confirm your bias. On the other side of the coin, read the book called Blink by Gladwell. The first 5 seconds of looking at something tell you exactly what you need to know. In that case, this is kind of a blink trade. Once the stock starts trading down, you're thinking, 20% move. I wonder if I held this stock yesterday, would I be selling into a 20% gain and saying, well, Mr. Market, thank you very much. May I have another? That's what I would be doing. And so when you see this confirmation of a zero continuation on this, a gap up, never comes back to it, starts trading down, your strategy is to go ahead and short, if you like to short stocks, your strategy is to short the stock. Even short it at 21.50, maybe, as it moves below the first minute of trading, the low, which would be 21.40. So let's say you're shorting it at 21.38. Well, lo and behold, just a few minutes later, you got a 7% gain in this. That's not to say you're going to sell it right at the bottom, but at some point here, you're going to start lowering your stop on the trade. You always want to have one in place. So that's the extent of my analysis here. Big gap up 20%. You got to be looking for the possibility that it's going to be a cap and run, but the probability that it's going to be a gap and crap and fall down. So that's what we have here. Just wanted to point that out to you. I think it was a good, it was kind of a good spot by Alex to be seeing this trade. And in this case, it was a great trade to the downside. What happens next with this? Well, nothing you want to worry about, because after this kind of move, I'll tell you one thing, there is a lot of pain in this chart. And what I mean by that is anybody who bought where it is right now, if you bought above where it is right now, you're in pain because you got sucked in and now you're hoping to sell on any kind of a rally, or you're giving up the ghost and just selling anyway. So I'm expecting this stock to consolidate for a long time. Certainly not a trade that I would be interested in taking now. But at 9:30, 9:31, 9:32 this morning, this was a monster trade. So anyway, that's all I got for you. Members, over to the strategy session. I've got, I think, some really good things for you. We're looking at some specific sectors and some stocks within those sectors, and I'm explaining to you exactly why I like these stocks and what the strategy is, and we're going to set a bunch of price alerts that will give you your game plan if those price alerts get hit. So that's all. I'll see you over there.